Good afternoon, my name's Kerry Stevenson from Symposium. We're here at the Investor Roadshow in Melbourne, and I'm talking with Greg Scealy from Melbourne Mint. Welcome, Greg.
Thank you, Kerry. Nice to be here.
Nice to have you here. Listen, there's been a lot of volatility recently in the gold price in the market. How do you see that at the moment?
If you look at anything in the short term, the gold price is often volatile, but we would perhaps equate this to, during the great bull market of the 1970s, at one stage there was a correction by almost 50%, and many supposed experts were forecasting a relentless bear market, and subsequently, because the fundamentals were still strong, the market rebounded by 800%. So I think there's a lot to be taken out of that for the current situation.
Well, recently times, central banks have moved away from being net sellers of physical gold to net buyers of physical gold. What do you attribute that to?
I would think like many others, it's probably a hedging strategy. I believe 180 central banks are holding gold, and as you note, they are net buyers, and of course with the immutable laws of supply and demand, if they're all buying, it means that there's less supply, so ultimately it's got to mean that the price will head northward.
Well, let's hope it starts heading northward. It's been a little bit stagnant recently. But you at Melbourne Mint are true believers in people holding physical gold and not just the paper gold or necessarily gold mining shares, but real physical gold. Could you explain why that is?
I guess it's a bird in the hand, really. Physical gold, you know where it is, you're guaranteed of having possession of it, and if there are dark clouds on the horizon, then you're assured of your investment. Perhaps paper gold options might be good for shorting the gold market and in a trading situation, but physical gold is a long-term strategy. You hold it for a significant period of time, and it's almost like an insurance policy, but you know what you've got.
Yeah, I think you do. Now, I know that Peter August, who is the CEO of Melbourne Mint, has had over 25 years' experience in the gold industry, but he's also very keen on coins as well as gold. Why the coin side of it? Is that a good collector item, or is that a good insurance policy, or is there going to be a big upside in investing in coins rather than physical gold?
I think coins can be a great investment if you really know what you're doing, but if conditions turn for the worst and there are difficult circumstances, then they can be a lot less liquid, for example, than gold can be. So. Sure, a lot of people can have great investments in coins, but you've really got to be an expert in it to do that, which Peter is.
So Peter's the expert, so if people want to find out about coins, they could go and talk to Peter?
Yes, one of our other businesses, Universal Coin Company, amongst many businesses that Peter owns, but in these times he would favour bullion over coins as a sound investment.
Well, on that fact of bullion, has Melbourne Mint seen a drop-off in sales during this time, or are we looking at gold on sale and the queues are going out the door? What's the market like for Melbourne Mint at this time? Demand
has been extraordinary this year. When we had the price correction, thanks to the sell-off in April, we probably did about 4 or 5 months business in 3 weeks. We had queues down the hallway, and often at the end of the day when we were closing up, when our live price feed went, I was walking out the front going, "Sorry folks, can't see you today. I know you've been here for an hour or so, but you'll have to come back tomorrow." And I was like, "Can you guarantee the price?" And I believe that the buy-sell ratio internationally on physical gold was about 95 to 1. And we literally, I think in a month, we only had about 2 customers sell back to us, and hundreds bought.
Now, I've been down to the Melbourne Mint. It's quite fun, and I know Peter has a passion for educating people, as I know you do as well, Greg. How does Melbourne Mint see the educational side of this, and how do you see gold really getting out there into the marketplace? Because from where I sit, it seems to me people don't really understand what gold is these days.
Well, Kerry, I hope you've got a long tape, because I could literally talk for hours about this.
I think we've got a long tape.
People don't understand that gold is actually an asset class by itself. And traditionally, through history, it's always been a store of wealth. And I think if you looked into like US retirement funds in the 1960s, for example, they typically held about 25% bullion. Now I believe the investment level is something like 0.3%, and half of that is in paper gold.
Wow.
All of the central banks are buying gold. China is buying colossal amounts of gold. I believe their consumption in the first half of this year, the numbers just came out, it was over 700 tonnes.
I saw that.
from what we can gather, total world mine production outside of China this year will be about 1,600 tonnes, so they're buying almost all of the gold in the world. And whilst there are dark clouds probably on the horizon with global debt levels and sovereign debt, the economist from Boston University, Lawrence Koplikoff, just ran some figures that instead of the $11.7 trillion US debt that they claim, he said their unfunded liabilities come up to $222 trillion. So
scary numbers.
They're just staggering numbers. And we would like to give people the opportunity to be able to protect their own investments, diversify and include some bullion in their portfolio, as has been done for millennia.
Well, that's all well and good, but most people turn around and say to me, well, the gold price has gone up, it's at 1,400, surely it's going to come back now, it's not a good time to invest. Do you really see the gold price continuing to increase? And if so, why hasn't it done so already, if the factors you've just spoken about are so true?
There's a number of factors. First, we look at what supports the gold price, and that's the fundamentals. One of them we've mentioned is central banks buying. Geopolitical turmoil, and with what's happening in Syria and subsequently Iran, I think we'll see on the horizon fairly quickly. The tension between Japan and China, there's a lot of reason to believe geopolitical turmoil is going to increase. Money printing is always
a precursor, I guess.
Yeah, and that's happening everywhere. We talk about America. Japan's printing 94 trillion yen a year, and they're doubling their money supply in 2 years. World's second biggest economy. I think Britain's printing about 600 billion pounds. Even Australia prints more money than the GDP is increasing by. I think we increase our cash supply by 11% a year, and the GDP normally sits about 3.5%. So there's a net compounded increase in money supply, about 7.5% in Australia. And of course, if you have more dollars or more pounds or euros chasing the same amount of goods, ultimately they have to be worth less. There will be a lag system while they sit in banks and slowly infiltrating the economy. But of course the sugar hit from quantitative easing is fueling all the stock markets. I mean, that and the fact that, of course, because they swap dollars for bonds, the bond market, the yield is so low that bonds become unpalatable. So all of this money is going to a stock market with inflating companies that don't have the fundamentals to warrant it. So these are all things that underpin the long-term value of gold as an investment. And as long as those things are in place, then the long-term future for gold, as it always has in history, is rosy.
Yes, but you say as it always has in history. In 1971, Richard Nixon took gold with the gold standard away. And surely that means that they can keep printing money for as long as they want, and it doesn't really matter to the gold supply because it's not associated anymore.
Yeah, that's a great Keynesian argument. There was a terrific article in the Australian Financial Review the other week by Maurice Newman, who was chairman of the ASX and head of Deutsche Bank for Australasia. He had a great line where he said, if printing money was the answer, Zimbabwe would be the most prosperous nation on earth.
I do remember that one.
Yeah, and it's true. There's been, 3,800 fiat currencies collapse in history. Part of Peter's journey, because when he moved into numismatics, he studied money. He's a great student of history. And as he studied money, he became aware of the phenomenon where many currencies have collapsed. And he thought, what's the commonality there? And it was the debasement of those currencies. I mean, it goes back to the first gold coin, the solidus, the Greek solidus from 700 BC. Very, very popular. So popular, they started adding a bit of silver.
Yeah.
Then it was 50% silver. All of a sudden it was copper, and of course it debased, and only the original gold solidus was worth anything. And that's what's happening with currencies around the world. So real assets, the same amount of real assets will still be in the world, but I'd suggest those assets might not be derivatives, they might not be pieces of paper, and they probably won't be dollars or yen.
Well, clearly there's a lot to learn, and there's a lot to learn from Melbourne Mint, who will be sponsors of the Gold Investment Symposium in October in Sydney. And I know that Greg and Peter August, the CEO from Melbourne Mint, will both be attending. They are sponsors of this symposium, so please come and get yourself educated at this year's Gold Investment Symposium.